In this video, traders, we're going to look at common reasons that we stare at our P&L and ways to fix it. Stay tuned. Hey guys, warm welcome to you. Alright, so there's common reasons why we stare at our P&L, and it's a bad thing because we end up trading the markets based on our P&L and not on the conditions that present themselves to us. And it's such an easy trap to fall into, and it's so dangerous for our profits, guys, because we end up framing everything around where we got in or where we want to get out, what we've had, what our P&L has been in the week, in the day, or current account sizes, and we don't end up framing a decision based on what matters, which is what the market does not care about us. We know this. Anyway, that's another topic. Let's have a look at why we tend to look at our P&L and reasons and ways and methods that we can fix not having to look at it. So one of the major things is we want to get back to break even. So in other words, we take a trade and the market goes against us and it's coming back. So say we're going long and it's going down, it comes back up, it's going down, comes back up. We are now framing our whole trade on the level that we got in on the long. Yeah, and if you agree, guys, give it a thumbs up. We've all been there. We've got the position, or maybe we're using the market depth, maybe we've got it marked on the screen, whatever it may be. Maybe watching the P&L, seeing it go down, seeing it come back up. Maybe it's kind of just almost there, it comes back down. We're framing our reference point is on that. It's anchored to our entry, not on something else, which is more useful, like, hey, how's the price responding relative to the opening price, to the low, to the weekly high, to the all-time high? Those are the important reference points, not our entry. And so we move the frame of reference from something that is useful to us and it's going to make sense, hey, this thing's pretty bullish actually because it's holding above the level, to framing a reference on our trade position. Well, hey, it's pretty bearish because it's right below our level. I just want to get back to break even. Just got to get there. And we completely misinterpret what's going on. So looking at the price we got in at and framing it around that big error that we all make, and we need to get rid of it. Number two, guys, is don't want to give back gains, specifically unrealized P&L. So the market's gone in your favor. You're now looking at that P&L, whether it's added onto your account equity value or whether it's just a running P&L on the day. You're going, oh, well, that's nice. And you start seeing it come back. You're like, oh, if it was nice before, now it's still nice, but it's even nicer before. And again, your reference point becomes the P&L, the high point, the joy of having that as locked in P&L. And so you're not trading it again based on the subjective manner of the market. You're trading it based on your P&L. These are the reasons why we start to look at our P&L. Number three, you need to hit a number. So if your goal is to make X amount per week, per month, per day, whatever it may be, we start again anchoring our reference to that. Oh, if the trade goes a little bit further, I'm going to hit my target for the day. Or if the trade goes here, and again, we're moving the frame away from what matters, which is the market conditions, the current price action, technical analysis, all that kind of stuff. Number four, guys, position size too big. I have all hands up for this one. This is something that has got me many times over the years, seem to have caged it now, but often trading way too big and then being so focused on each intricate little move rather than ignoring the noise, because each real tick is probably too much for you and you're like, oh, that's quite a lot, and it runs up 10 ticks and your emotions are more amplified for it, and then you end up staring at the P&L rather than relaxing, sitting back, observing what's going on, having your target there, having your stop there, ideas for when you want to scale in, scale out, and just letting the trade mature. Instead, you're kind of watching every single tick. So these are some of the reasons why you might end up staring at your P&L. All of these are negative, guys. We don't want to be staring at P&L. So fixes. Easy things for me to say is just don't stare at P&L. But we know, guys, it's trading. We're human beings. We make mistakes. We have habits, all this kind of stuff. We're in the real world. So the real world is what tools and what little tips and tricks can we use to stop staring at that P&L. The main thing is to have your charts and brokers separate. Brokers, there are some great brokers out there, superb brokers that execute brilliantly, got really tight spreads. And by the way, found with a really good tight spread on spread betting, check it out in the description below. But whatever broker you're using, nice tight spreads, you can just use it to trade from. You don't need the charts, and the broker's charts, they're okay, they do the job, but often you want something a little bit more functional, a little bit more useful for your multi-monitor setup, whatever. So if you split them up and say you have your charting platform on one, your broker on the other, that means that when you trade, you minimize your broker, you've just got your charts to reference. You're not then constantly being forced to the P&L. Same if you've got the price ladder. And if we're trading through directly to the exchange, very often the price ladder has the P&L on. You can switch that column off, so you're not seeing every tick, you're not being exposed to your P&L for every tick. Number 3, execute and close. If you don't decide to split your broker and your charts, which is makes it very easy for you because then you should look at the charts, not the broker, execute your trade and then close it. Put your stops in, put your limits in, protect your risk, all this kind of stuff, but don't stare at the screen and then go and look at something else. And the final thing is avoid trade. One thing actually I should have put in here, guys, if you are trading with your broker, then make sure, what you can do often is switch off the P&L, or you can hide it in some way. And I've seen guys literally with post-it notes over it. Change lots now because the functionality allows you often not to display your P&L, but many times I've walked into trading floors and I've seen guys with post-it notes. What are they a post-it note for? Oh, just to cover up P&L. They don't want to see the P&L, and that's just the way they have to do it then. And you can actually get, you have to have a physical post-it notes. These were in this case, but you can have actual post-it note app on Windows especially, where you can just move it up, and I'm sure it's on Mac as well. Anyway, you get the point. You can cover up your P&L if you need to. You can use whatever lengths possible so you're not having that P&L stare you in the face, because everybody knows that staring at P&L is a bad thing. Right, final thing, guys, 4, avoid trading on phones and tablets. Now sure, if you get an alert and you want to trade and you've pre-decided you want to trade, phones and tablets are very useful. Checking current conditions, executing a trade you've pre-planned, checking an order's been filled, cancelling an order, that kind of stuff. Admin if you like, but not actual trading, because all you're doing is looking at P&L on that. You can't really do proper analysis. Yeah, you can look at a chart, but it's very difficult. You're kind of zooming in, you're pinching, it doesn't make much sense. Your environment is different as well. So recommend not placing trades that haven't been pre-thought out and pre-decided on your phone or tablet, because then you're generally trading just off your P&L. All right, guys, those are 4 reasons we ended to stare at our P&L. Add a 5th in the comment section below for me if you've got one, and those are 4 fixes. And again, add a 5th in the comment section below. Take care, whatever you're doing, keep off staring at P&L. Bye-bye.